Viewers, every major revolution starts from a tiny spark. The spark of the dot-com bubble was a computer program named Mosaic. In 1993, when the internet was a dull place, and only text-based browsers existed, Mosaic showed the world magic. It was the first web browser that displayed pictures along with text. This was the first spark of the early internet. After this, the internet came alive. Colorless pages slowly started becoming colorful. Behind this magic was a young programmer named Mark Andreessen. He and his team realized they had created something huge. They formed a company and named it Netscape. In August 1995, Netscape did something that shook Wall Street and the global stock markets. They decided to sell the company's shares to the public, an IPO. They priced one share at $28. But as soon as the market opened, that same share jumped to $75, then closed at $58. A company that wasn't even making proper profits, just a browser made it worth $2.9 billion overnight. But the success wasn't only Netscape's. Those who bought the $28 shares saw their investment double in just one day. For investors worldwide, this was a signal. If a company has .com in its name, its valuation can touch the sky, even if it's not making profits. This gave birth to a new mindset. Profit is optional, growth is king. People started buying shares of every company that had .com at the end. Not to earn company profits, but to enjoy the rise in share price. After Netscape's success, the .com gold rush began. Everyone started an internet company. Venture capitalists were blindly throwing money at anything. Someone made a pet toy company and named it Pets.com. Someone opened a fashion store called BOO.com. Then came Etsy.com, and for ordering groceries online, a company named Webvan.com was launched. Things went so far that in just the year 1999 alone, 457 companies launched IPOs, mostly .com companies, and their share prices jumped 80 to 90% on the first day. This was the era when people were becoming rich for no real reason. A common person who knew nothing about the stock market was investing his entire lifetime savings into .com stocks. The American Central Bank chairman, Alan Greenspan, called this madness irrational exuberance. He warned that greed had crossed limits, and the market was like a balloon filled with too much air, ready to burst. But since everyone was making money, they ignored him. FOMO, the fear of missing out, ruled everyone's mind. Company CEOs behaved like rock stars. One company, BOO.com, burned $188 million in just 6 months only on luxury. Another company, Pixelon, spent millions on a Las Vegas launch party with famous bands. Most of these companies had no business model, no real worth, but they spent huge amounts on flashy parties. Not to sell products, but to sell their shares. These companies were alive only as long as new investors kept coming in. For example, in June 1999, an online grocery service called Webvan opened a delivery center in San Francisco. They sold $5 million shares out of their $32 million in IPO. With that money they opened warehouses, bought delivery vans, and hired an Apple executive to attract more investors. Seeing this, investors worldwide feverishly bought Webvan stock. Its price doubled and tripled, and the company's valuation touched $10 billion. Everything seemed perfect, but the balloon was about to burst. At the end of 1999, fear spread that when the year changed to 2000, old computer systems would go back to 1900, crashing everything. Nothing happened in reality, but the fear made people sell stocks heavily. In February 2000, Alan Greenspan raised interest rates. This meant loans became expensive, and keeping money in the bank gave higher returns. People pulled money out of stocks and kept it in banks. .com companies, which survived only on new investments, started collapsing as investors fled. In March 2000, Japan announced its economy was failing. This terrified global markets. People rushed to sell risky stocks, and the riskiest of all were .com stocks. With these three needles, the balloon finally burst. The Nasdaq, full of tech companies, crashed badly. From over 5,000 points, it fell to 1,000 points, an 80% crash. If you invested $100,000, it became just $20,000. Around $1.75 trillion, nearly 100 Indian rupees lakh crore, evaporated from the market. Companies worth billions became worthless. Pets.com, Webvan.com, Etsy, Boo.com, thousands shut down. Millions lost their jobs. The dot-com dream turned into a nightmare. But from this pile of ashes, some companies survived, and later ruled the world. Amazon, Google, eBay, Apple. They survived because they had something most dot-com companies didn't. A solid business model. Experts say the real blame lies not only with dot-com companies but with the capital markets, investment banks, and venture capitalists who fueled this fire with greed. The dot-com bubble taught a painful lesson. No matter how revolutionary technology becomes, business fundamentals never change. But shockingly, it seems the world hasn't learned from a 25-year-old disaster. In 2025, new technologies like AI and crypto are seeing the same madness. Companies put AI or blockchain in their names and get millions in funding, even when they have no real AI work. A perfect example is Builder.ai. In 2023, at a luxury hotel in Vietnam, a grand party was held to launch a new technology that claimed it could build apps without coding using AI. Big investors like Microsoft and SoftBank invested $250 million in one day. The company's valuation hit $1.5 billion. But behind the scenes, the apps were not made by AI, they were made by human engineers in India, Vietnam, and Romania. Builder.ai was just a front using the AI label. They were also accused of fake billing to show higher revenue. Once these truths came out, the story started. Looking exactly like the dot-com bubble. The company is now under fraud investigation. Have we learned anything from history? Or are we walking into a new, and possibly even bigger, bubble? What do you think? Tell me in the comments. Hope you will like and share this video from Simple Truth.